Across the USA, the commercial real estate sector is facing a collapse. Buildings around the country are losing their value quickly, and huge numbers of businesses and banks are facing the possibility of bankruptcy from these failing ventures. This current crisis is almost certain to escalate, as a lack of confidence in the industry is creating mounting losses and causing many companies to fail. There is now a real possibility of the contagion spreading from companies to financial institutions, which could cause systemic risk and large losses to ripple through the financial system. Some experts are now warning that if the situation is not fixed, it could cause a financial crisis similar to that of 2008, if not worse. So why are people so worried about commercial real estate and the effects it might cause? And why are people comparing this crisis to the one in 2008, which almost led to the collapse of the entire global economy? In this video, we will answer these questions by examining the commercial real estate industry and finding out exactly what is happening. So let's start with the basics. What is commercial real estate? Commercial real estate, or CRE, is property used exclusively for business-related purposes, or to provide a workspace rather than a living space. It can include a wide variety of categories, such as retailers of all kinds, office space, hotels, resorts, malls, and restaurants. It differs from residential real estate, whose sole purpose is to be lived in. What is the business model? The CRE business model is very simple. Commercial property generates income by leasing space to businesses, usually for long terms. Contracts typically last for 3 to 5 years. These long leases give the landlord a considerable amount of cash flow stability and can be highly profitable, as long as the tenants can survive and continue to occupy the building. Commercial properties are in general much larger than residential properties, which means the cost to build them is extremely high. The construction or purchase of almost all commercial buildings are funded via loans from banks. After these loans are taken and construction or acquisition is completed, the repayments to these banks, including the interest, become the main cost for the commercial landlords. CRE ventures can create significant profit, as a large number of tenants can occupy a single building and generate income far higher than costs. You only have to look at the skyline of any major city in the USA to see how successful this industry has been in the past. However, when things go wrong, as they are now, it can cause major losses and have wide-reaching effects. So what has gone wrong? There are two main causes of the CRE crisis playing out at the moment, one from the demand side and one from the supply, both of which are exacerbating the problems. Low demand for office space. The commercial real estate industry was rocked by the pandemic in 2020, when the government made it mandatory for people not to go to their offices and wherever possible work from home. During this time, many businesses implemented remote working environments, which are still being used today, and reduced the size of their offices and working space significantly. A large number of companies even ended their contracts with their commercial landlords and closed their offices completely. All of their staff now work from home. These changes have reduced the demand for office space, and as a result, empty spaces in commercial buildings are increasing daily. The vacancy rates of commercial buildings across the country are near record highs, and landlords are losing their income streams. According to Moody's Analytics, the average vacancy rate for America's office property is nearly 20%. Before the pandemic, Manhattan's office sector never had an average vacancy rate of more than 11% for decades. Now, city officials are warning that Manhattan building owners will face office vacancy rates of more than 20% for most of this decade. In San Francisco, the situation is even worse, with vacancy rates hitting 35%, the highest level the city has ever experienced. The same situation is occurring across all major cities in America, and there are no signs that people are going to be coming back to the office anytime soon. Interest rates. In the years between 2008 to 2022, loans for commercial real estate had very low interest rates. This meant that companies taking out these loans found it easy to make repayments, even when vacancy rates started to increase. Now things are very different. Credit is drying up, lending standards are getting stricter, and interest rates have increased at a faster pace than most businesses ever expected. Loans for commercial real estate can now come with interest rates as high as 10%, which is enough to cripple most businesses. This is already causing a lot of pain. Owners of commercial real estate cannot afford the repayments, which have gone up significantly. Furthermore, companies who have fixed-term loans which are due to expire are becoming much less likely to renegotiate, as new loans will have far higher rates. According to Morgan Stanley, around $1.5 trillion worth of commercial mortgages will need to be renegotiated in the next 18 months. Many companies are already choosing not to do this. The result of these two changes in the market is simple: lower incomes and higher costs. This is making commercial real estate unprofitable, and many commercial landlords are now giving up. They are choosing to close their businesses and sell off the buildings to the highest bidder. However, whoever decides to purchase these buildings must also take on the debt involved. As a result, the value of commercial real estate is now plummeting, as prices need to be reduced quickly in order to find a buyer. According to the IMF, commercial property prices across the United States have tumbled by 11% since the Federal Reserve started raising interest rates in March 2022. However, this doesn't really reflect how bad things have become. According to a recent report from Capital Economics, commercial property prices in New York and Chicago will see 30 to 35% declines from 2023 to 2025. While in San Francisco, price falls could reach 45%. Some analysts are expecting a fire sale in commercial property to start soon, as confidence in the industry collapses. There currently is no limit to how much prices could fall. It is clear that in the coming years, many CRE companies will go bust, and many buildings will likely be closed or even demolished. However, this is not the end of the story. A much larger problem is now starting to emerge in the financial system, as banks begin to realize that all the loans they gave out to fund these CRE constructions are not going to be paid back, meaning banks are facing a high risk of losing their income. The new financial crisis. In the US, most commercial mortgages are not usually provided by the biggest banks. Instead, the majority of these loans are made by a large number of much smaller banks, which operate on a small scale within the country. These are referred to as regional banks. Across the country, these regional banks have given huge amounts of credit to CRE ventures and are now extremely uncertain about how much repayments they will receive. If these banks do not receive the income required to cover the loans they have made, they could likely go bust, which could create a crisis of confidence throughout the US. If members of the public start to believe that the banks where they save their money at are about to go bust, it will not take long for bank runs to begin, and bank runs can escalate quickly. Furthermore, many pension funds have invested heavily into commercial property ventures. Now they are starting to see that the expected returns are not materializing, and are choosing to sell these investments on. Across America, many people's future pensions will be dependent on these CRE investments working out. But this is looking increasingly unlikely. This could be extremely dangerous for the American public, as returns on their pensions could take a hit. In 2008, a similar situation occurred, but in the residential real estate market. Many homeowners were unable to pay their mortgages, and this caused huge losses for banks across the country. The collapse in income streams spread around the banking system worldwide. Panic ensued, and the Great Financial Crisis was the result. It remains to be seen whether the current crisis can be stopped or even mitigated. However, with inflation still too high for the Federal Reserve to lower interest rates quickly, and an economic recession looking ever more likely, there is a high chance that the new financial crisis may be on the way. If you enjoy this type of content and would like to know more about the most important economic trends affecting our world, make sure to subscribe to the T15 report. If you know anyone who would like this video, then please share it. Alright guys, thanks so much for watching and I'll see you on the next one.